Whether, 5% interest rates are enough to slow inflation to where it needs to be, I don't know. So I talk about one of those uncertainties out there, is it 5%? And, my view is it may very well be 6. Those storm clouds could be a hurricane.
What's up, guys? Welcome back to Christian Finance for your regular financial content. And today we're covering what JP Morgan CEO Jamie Dimon has to say about the current state of the banking system and as well as the markets and where we're headed in the short to midterm. As well, of course, afterwards I'll give you my own personal perspective on where we're headed in the markets in the short to mid to long term.
And when I look at uncertainty, there's always uncertainty. Every day of every life is uncertainty, but it's heightened. And it's heightened because of Russia, Ukraine, oil, energy, quantitative tightening.
Yeah, and I mean, what he's saying, I do agree with to a large extent. There is a lot of uncertainty still. For example, with the Russia and Ukraine war, we still don't know what's going to happen there. There has been a lot of macroeconomic effects because of it. And the world economy really would be in a better place as soon as it ends. Obviously, a lot of other things would be in better place as well once it ends. Of course, he mentioned interest rates as well, potentially going up to 6%. But we'll have to see with that one. I mean, the inflation rate, as we can see, it literally has been going down every single month since the peak in June of 9.1%. But even still at 6.5%, that was just the on paper inflation. Realistically, it's more like 12 to 14%, which still isn't great, right? So we still have a lot of room to decrease there. And I do believe that if the Fed decides to be a little more aggressive, we might see at least 1 or 2 more interest rate hikes. So yeah, as we can see, there is still a lot of uncertainty. Supply surplus and supply shortages of certain goods also isn't helping. We still haven't found an equilibrium in the supply of various goods. As soon as we're able to resolve that problem as well, it will be a very positive sign for that. I do just want to take a quick second and ask you guys, if you're enjoying the videos, slap a like, also subscribe down below, hit the notification bell, just so you get notifications every single time I upload. And let me know other similar financial content you'd like me to do next. There's nothing that I'm promoting right now. No ads, no affiliates. Only thing I ask, guys, just subscribe to the channel. Despite all the recession talks and all the macroeconomic negative factors, the Dow Jones is actually holding quite steady, which is good to see. Bitcoin on the crypto side had probably about 18% increase in the last week, which is also another positive. Gold is doing well as well. And to that point, quite often do with Warren Buffett, he lives and invests by his own words. Be greedy when others are fearful and be fearful when others are greedy. When prices are near a bottom or they're headed down, he has a strategy in place in which he dollar cost averages into his high conviction plays. And when we're in a bull market and near all-time highs, that's typically when he either holds or potentially sells and takes some profit off the table. So right now, yes, we are in a downward facing time. So it's the best time for you guys to start doing your research. And of course, after you have an emergency fund and have money that you won't need for the next 5 years at least, you can do some dollar cost averaging into high conviction plays. Not financial advice, of course. With that, guys, the video is over. Let me know what other similar financial content you'd like me to do next. Make sure to subscribe down below to support the movement. And as always, stay diversified.